time now for our moment of the week. And this time we're taking a closer look at the big deals in the AI space. So OpenAI has continued its busy autumn of deals, announcing on Monday they have agreed to purchase 10 gigawatts of computer chips from US chip giant Broadcom. That follows similar deals with other key chip makers in the space, such as AMD earlier in October and NVIDIA last month. But these recent deals have raised alarms over OpenAI's vast network of connections. Indeed, some of the most valuable companies in the US are now tied to Sam Altman's AI startup to fulfill major contracts, raising concerns, therefore, over a potential AI-fueled bubble. But let's take a European angle here. What do these mega deals mean for European companies such as ASML? Well, some analysts suggest that OpenAI's success could boost the tech space on this side of the pond too.
As long as OpenAI can sort of get the demand and create the revenues, then that's going to flow into the data center companies, into the chip companies, and then into TSMC, and then ultimately into ASML. You know, that's how the whole supply chain works.
But alarm bells are ringing on both sides of the pond, in fact. In its latest Global Financial Stability Report, the IMF warned that global markets were growing too comfortable with risks. The fund said that equity and corporate credit valuations were, quote, fairly stretched as enthusiasm over AI mega-cap stocks continued to drive historic market concentration, warning of a potential sudden and sharp correction. We've heard from a number of policymakers as well as industry experts this week on the potential risk of high AI valuations. Listen in.
If all of a sudden there is a sharp repricing, then everything that we've seen in 2024 in terms of the investment surge, the valuation gains feeding into stronger consumption, all of that would go into reverse and that would weaken activity. There is a historical precedent for this. I'm not saying that history repeats itself, but we can look at earlier episodes to get a sense of what might be happening. And of course, that's the dot-com boom in 96-2000, followed by a market correction in 2000-2001.
We certainly do see some stretching in valuation. So at the moment, we think that stocks are, perhaps 10% overvalued on average, though that is much less than, say, in the tech bubble of '99, where, according to our estimates in the Global Financial Stability Report, the stretching was twice as much, of the order of 20%.
So it's not dot-com all over again?
Exactly, it is not. It is not. But having said that, there's very high concentration.
Some people predict that will deliver the holy grail of superintelligence. Others, and I'm probably more inclined to that view, think there are certain limits to that probabilistic AI technology, which means that it won't perhaps be quite as all singing and all dancing as people suggest.
And as with any correction, European markets are unlikely to be immune.
Earnings have been delivering, and for what it's worth, we're seeing earnings for the AI team will continue to deliver. Now, if we are wrong and earnings start to disappoint, and you see a broad-based unwind of this AI positioning, look, it may be somewhat silver lining for Europe, and we had some of that at the start of the year. Around the DeepSeek moment, we had a significant underperformance of the US market, Nasdaq in particular, and some kind of rotation into the tech-light indices like Europe, right? So if it is a pure sector rotation and regional rotation, I think Europe could be benefiting. Now, if this potential AI issue become a much broader economic shock in the US, would start to hurt the retail investors, the consumer, and the economy, then I think it's hard to see Europe benefiting from that.
And to discuss this topic in further detail, we have Arjun joining us with more. Arjun, you've had a very busy week. You were in conferences, you had plenty of interviews. What are the industry officials telling you at this stage in terms of this growing narrative around very high AI valuations and a potential bubble here?
So there's views across the spectrum, I'd say. Firstly, when you speak to the technology industry and executives in that industry are a very bullish bunch, right? They'll say that, of course, this is not a bubble. that there is heavy investment going on because this is technology that needs heavy investments into data centers, into chips, and that they're building the infrastructure for the future. And if this comes off, then this is going to be huge economic benefit. It's going to mean valuations for tech companies are higher than they are now. And so that's the view from the tech industry more broadly. Then there's the other subset of when we look at analysts and investors getting concerned about the circular nature of some of these deals. We talk about companies like OpenAI and the companies they're invested in, NVIDIA and the companies they're invested in, and the relationships between all of these companies. There are concerns that if there are any kind of failures or issues in some of those companies, the knock-on effect could be very great. And I think the final part of concern is really the concentration of big tech firms in markets in terms of indices. And the fact that the largest technology firms in the world make up a huge percent of these indices, that when they move in terms of their stock price, that could have an outsized impact on broader markets as well. And so the big issue, I think, for AI, if there is any kind of correction, if that does happen, of course, is it is integrated so tightly with a supply chain that spans globally. And if there are issues with, for example, demand, and that means there's CapEx changes from big tech, that will then filter through to companies like NVIDIA, and then NVIDIA's very, 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 very long supply chain, which spans into Asia, which spans here into Europe. And that, I think, is some of the concerns, is how interlinked a lot of this is.
We have been showing a chart that highlights indeed how circular this bubble ultimately is in terms of deal making, right? And you're highlighting the global aspect of the ramifications ultimately here. But if I get your thoughts on Europe for a moment, you had the numbers from ASML this week. Of course, so far so good, but to what extent the risk is actually quite significant for European companies to amid this web and the global supply chain that we have when it comes to chips?
So look, with ASML, and this is a great example, right? Yeah. ASML, the lithography machines required to make the most advanced chips in the world. And these are machines that are bought by TSMC, they're machines that are bought by Samsung, by Intel, the 3 chip makers, TSMC being, of course, the biggest by a long, long way. There is excitement from the investor community that actually ASML's earnings and revenue will recover in 2027, and they're saying that in 2026 revenue won't decline. And so that's giving indications here that the market expects demand to remain strong. And if we saw from TSMC yesterday, they were saying that actually they're seeing this AI mega trend intact, and that demand for AI is stronger than they thought just 3 months ago, and they've raised guidance as well. And so again, suggesting that demand is strong. However, if that demand does not materialize, the knock-on effect can be huge for European companies because of where they fit in that supply chain, in particular when it comes to semiconductors. So right. If data center, or if the big hyperscalers say, no, we don't want to build this anymore, we don't need as many NVIDIA chips, NVIDIA doesn't use as many orders, it means less capacity over at TSMC, it means TSMC may not expand capacity as quickly, and therefore may not buy machinery from ASML and some of these other equipment makers here in Europe. And I think that is where the risk is, all the way down the supply chain and further beyond ASML too.
Very clear. Bottom line, if you're worried about AI valuations, keep an eye on demand. Arjun, thank you so much for joining us this morning.